Hello, welcome to European Open Briefing for Wednesday, July the 4th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So trade fictions continue to weigh on market sentiment this morning, though not as much as in the previous couple of days. We can see Asian indices although they're mostly in the red, losses are somewhat more contained. In Europe, though, we again have a negative start, though we did see strong gains yesterday. So it's slightly calmer today following the People's Bank of China yesterday making statements in an attempt to restore some sort of calm both in the currency and equity markets. The US dollar is weaker this morning. It's drifting lower mainly due to expected thin liquidity as US markets will be closed. The pound did get a bit of a lift yesterday. It had earlier risen about 1.32, currently trading around 1.3190. We had hawkish remarks from a Bank of England policy maker. We also had strong PMI readings on construction and manufacturing, and there are reports that Theresa May is aiming for a soft Brexit as she gets ready to propose another solution to a customs partnership with the EU at a special meeting on Friday with her cabinet. The Australian dollar did earlier jump to 1 week high following some upbeat data out of Australia and Asia, though it's somewhat paired those gains at the moment. The Kiwi has held on to its gains. The Kiwi is up despite the fact that we saw a big drop in dairy prices yesterday, but it appears to be joining in the rebound. The Canadian dollar rose to 2.5 week high. Again, like the Aussie, it's given up some of those gains. USD CAD is up at the moment around 1.3150. The loonie was boosted from higher oil prices as well as very strong manufacturing PMI numbers out of Canada yesterday, boosting the chances of a rate hike by the BOC next week. Oil prices, again, we're seeing some pairing of earlier gains. Yesterday, we saw WTI surging to a fresh 3.5-year high following a big drop in US crude stocks as we're seeing the impact of the Canadian outage, which is affecting supply to the US. Gold is benefiting from the weaker dollar. It's up by 0.5%, around $1,258 an ounce. So let's now look at the main movers. Gold is up there as the best performer among major assets. At the bottom, we've got crude oil. So that's mainly profit taking. We can see there, though, in terms of currencies, the Kiwi is one of the best performers at the moment. Let's now look what's happening to the yuan, because yesterday the Chinese currency had fallen to an 11-month low. It's firmed significantly this morning to around 6.60. We had the People's Bank of China saying that they want to keep the yuan at a reasonable and balanced level, and they are watching market moves closely. There are also suspicion that the People's Bank of China may have also intervened in the currency markets to support the yuan. But sentiment remains fragile. We're seeing Chinese stocks continue to suffer heavy losses. If we look at the dollar yen now, we can see it's been a significant retreat from those 6-week highs above the 111 level. We can see prices finding support at the 50 moving average in the 4-hour chart, around 110.30. US markets will be closed today for Independence Day, but there's going to be plenty of action on Thursday with the FOMC minutes of the June policy meeting, and on Friday we've got the June non-farm payrolls report. We did see losses in US stocks, though yesterday technology shares came under pressure after China banned a US firm called Micron Technology from selling chips to China, fueling fears that this was a retaliatory move due to the recent attempts by the US to impose restrictions on Chinese investment into the US. And let's now take a quick look at the Australian dollar. It's has recovered significantly from those 18-month lows touched early in the week. It hit a one-week high of 0.7424 yesterday, so earlier today. We did have strong PMIs out of Australia, Japan, and China beating expectations for the month of June. So that did help improve sentiment somewhat this morning. We also had better than expected retail sales numbers out of Australia for May, though we can see that those gains are still very small in considering the sharp losses we've seen for the Aussie during the months of June. Let's now take a quick look at today's economic calendar. We've got UK services PMIs coming up shortly. That will be the main data due to the US markets being closed. That's it from me. Thank you very much for watching and have a great day.